Seems like everybody has a Forex YouTube channel nowadays, right? It's time for you to see why I'm one of the longest running YouTube channels with relevant, consistent, and timeless content. The most consistent and real Forex mentor and trader who's going to show you live results all the time. I urge you all who are aspiring students to give me a call and experience the difference. 619-451-6508. All right, so by now, most of you should know that my name is Yusef Scott. I'm the guy behind the So Darn Easy Forex University, also better known as the Forex Gold Online. Listen, if you're one of those who are watching this video and you need Forex training, whether it's indices, scalping, long-term, swing trading, day trading, go and check out www.sodarneasyforex.com and you can see the whole entire slew of options I have for training you. All right. Now, listen, as I tell you guys all the time, if you're watching this video and you're not yet subscribed to this channel, click on that subscribe button. Actually, hold on. As I always tell you guys, very grateful and thankful to have you guys here watching yet another video of mine. Now, if you're watching this video and you're not yet subscribed to my channel, now you can click on that subscribe button at the bottom and make sure you also follow us on social media because we're on Facebook and Instagram as well. So listen, I wanted to analyze yet another chart for you guys. For those of you who are watching me for the first time, for those of you who may have seen me before and you're not really sure if I know how to really break down a market or analyze the charts, maybe you heard some things, good or bad, and you want to see, okay, what is this guy all about? I have yet another pair that I want to analyze this week. Last week we went over the Euro USD, in which that market is still hovering, waiting for the right side, of course, to get in and ride the market up. Well, this time we're going to be looking at another pair, and I want you guys to pay attention to this, all right? All right, so the pair that we'll be analyzing today is none other than the USD Swiss, all right? If you guys notice, this market soared to this level, and we've been dancing around at this level over the last couple of days, let's say all week, all right? When we look left, we'll see that this market actually came to this level a number of times, using it as support and resistance. If you guys can know, nice pivots off this level. And you can see dating back, this is 2015 when the Switzerland franc currency actually collapsed. The market actually moved away from this zone. It gapped up and slammed right through it. And since then, it's been going back and forth from this same level. But before then, you can see that this level has been well respected. All right. Go back some more. You can see still well respected. Look at this great pivot. All right. So we see that this is a great level. OK, so when we look at the CAD Swiss, which is in the same family, we look at the CAD Swiss, we can see that the CAD Swiss is currently doing something similar. The market, while it did not go straight up as seen with the USD Swiss, the CAD Swiss actually chopped around a little bit and went up, but currently we're dancing around this same level. All right. When we look left on this one, looking at the white double level here, you can see that again, this zone is well respected, whether it's support or resistance. All right. This is the Switzerland franc actually collapsed in January 15, 2015. Again, if you look back, you can see, we zoom in on this, you can see that the market, that isn't much of anything. We look back, see if there's anything else. And there's nothing, but you can see that this level is well respected. So when I cross-analyze these pairs, okay, I would have to say that there's a greater chance of this market dropping down, all right? With the CAD Swiss and then the USD Swiss both sitting at a resistance level that's been well respected for over the years, I'll say, the fact that they're moving alike makes it highly likely that if the market drops down on one, it'll do the same on the other, all right? So when I zoom in on this and I look at how the market arrived at this level here, all right? I have to look at how the market started off this week. This week, the market opened off of a gap down, and then it closed right here at the zone. All right. The next day, the market opened rather whipsawish. It's still closed bullish. All right. not exceeding the wick of the previous day. The very next day, this is where you start to pay attention to how the market is stalling. The market opened, very small movement up, still within the zone, but the market went all the way down, but backed up within the very same zone area, which leads to today, the current candle is still within the same zone, but of course we have the entire day before us. So when I look at this and I see how this market closed yesterday, this market over the last 3 days is still at this very same zone. Now, some may ask the question, well, if you look at this one, this market actually gave a sign, a potential sign of the market moving down. Well, let me tell you what the market didn't do. All right. The market, while it was running up, the market actually gapped down, went up, but turned around by the end of the day. Now, following that move, the market did not continue going down. The market went north. All right. So there was, you know, although the market did stall, let's say the market stayed here for one day, the market didn't remain here. The market moved away from this area. So here we are 3 days now, the closure of this day, Monday, and now Tuesday and Wednesday's candle, we're still within the same price zone. So with that, we see that the market is going nowhere really fast, all right? Which makes it highly likely for the market to drop soon. Now, please know, just like this candle here, bearish candles in a bull run, the market may not stop here. It could still go higher. All right. Now, if the market chooses to go higher, if you're already trading it, you just stay in. If for whatever reason you decide to get out, don't try to re-enter in on the market. You know, you take your money, you go trade something else. That's one of the biggest mistakes the traders that make. They get out and they try to get back in. If you had a run from the bottom, you had your run. Go find something else to trade. So hopefully you guys, you've taken in what I've explained with the USD Swiss as well as the CAD Swiss, because they sort of run together. Hopefully it made sense to you guys. You know, sit back, watch this video again and watch it again and again until it really, sinks in and it makes sense. So hopefully you guys can see the depth of knowledge, or whatever you want to call it, that I have of the markets and how I analyze the market. You can get familiar with it, because this is what I do for my students. So listen, as I tell you guys all the time, have nothing short of a fantastic day. Remember, stay healthy, stay safe, and let's remember to stay prayed during the times we live in. I'll see you guys in the next video. Peace.